Hello and welcome to Blockchain Global News. I'm Jane King at the NASDAQ market site. With me today, Luke and Benjamin Blodgett of Octic Capital, so welcome. We just have wrapped up New York Blockchain Week. Tons of excitement. I mean, I was over at Consensus for a little bit. Give me an overview of like how it was. What did you learn? What were the exciting trends? Luke, we'll start with you.
Yeah, so I mean, you saw the Lambos outside. You saw all the flash, but there was actually a lot of substance this year as well. I mean, 8,500 people. Last year was only 2,700.
Seemed like more than that.
Yeah. Oh man, it was packed. Well, it was more than that.
Yeah.
it was crazy. Everyone was. It kind of made it into a central hub. But yeah, lots of exciting things happening. Lots of companies there, and you know, I mean, we're talking FedEx, Coca-Cola, Microsoft, Amazon, and talking about ways that blockchain is going to revolutionize their industries, which was pretty cool. And of course, as you know, this is a time when these companies announce new things. All blockchain companies. That's usually what this is, and there was no shortage of that this week. All kinds of new projects out there. So yeah, very exciting.
What are some of the most interesting projects that you heard this week?
Well, I think that, I mean, there are quite a few projects. Actually, I was more interested in companies like FedEx who want to take their entire infrastructure and put it on a public blockchain so everyone can see exactly where a package is at any given time.
Super helpful.
Yeah, or you know, Coca-Cola putting all their intellectual property on a blockchain, so it's very easy to track who they're licensing their property out to. So these were a lot of traditional companies with projects that were really interesting. It shows acceptance.
Yeah. Anything that you thought was particularly interesting?
You know, we saw some ICOs moving around the market microstructure space, kind of doing like market making between decentralized exchanges and centralized exchanges that would bring some further liquidity that were pretty interesting. A lot of market microstructure issues that haven't been addressed before.
Yeah, there is quite a bit there.
And a lot of speakers too. I saw Jack Dorsey was talking about Bitcoin could be the currency of the internet. And I thought that's a really interesting kind of concept, because a lot of people still think, what do I go to a grocery store and pay in Bitcoin? But it does help digital transactions.
Yeah, and we haven't really talked about Bitcoin, but you know, it really still is the center of the ecosystem, and you know, maybe you can expound on that. It's really,
we probably have a different hypothesis than most as to the outcome of Bitcoin, and it's not for the most intelligent reasons, but it is for a reason that's been persistent in traditional markets. So you look at the U.S. dollar. That's been hasn't officially been a foreign currency reserve in any capacity since they left the Bretton Woods Agreement in 1972. Back then, there were approximately 70% of all the U.S. dollar was involved in about 70% of global transactions, and that's including as a base pair in Forex and such. Fast forward today, it's around 60%, down about 10 from the 70s. So, and
it's because change is hard.
And you look at that, there's a lot of countries that are also using it as cash for no reason other than that's what they've been doing for the last 30, 40 years, and now we're adding about $1 trillion every 5 months to the deficit, and we're having a hard time getting all our bond auctions filled, so we have to raise rates to be competitive. And then you also have the issue that if you're not continuing that bond float out, then you may have US dollar devaluation. That's further going to push Bitcoin up. But we think the real reason it's not going to go away is it's 98% of the base pairs of all the exchanges out there.
Bitcoin
it's the only derivatized spot currency that's on a CFTC NFA approved venue. Well, outside of swap execution facilities that really have no flow. But for that reason, just because they're the essentially foreign currency reserve of the cryptocurrency world and all the architecture has grown around them, it's a lot easier for them to refactor the back end of their code than find new user adoption or have all the merchants around them refactor their code.
So when Mr. Dorsey says, I think this could be the money of the internet, I think he's absolutely right. I think it's going to be very hard to move away from that. He did at the end of the conference kind of say it may not be Bitcoin. We think it's highly likely it's going to be Bitcoin because
we've certainly got the early advantage.
Exactly. Everybody knows Bitcoin.
Everybody knows that the brand is there.
Right.
Now also banks seem to be warming up, and we heard it was 6-9 months ago Jamie Dimon was kind of poo-pooing Bitcoin, but yet they're collecting Bitcoin.
Exactly.
So what's going on with the banks and cryptocurrencies?
Well, 3 of the 4 U.S. banks that we talk to here have a Q3 mandate, and we're looking at a lot of firms out there that have very near-term mandates for external managers, for internal projects, a lot of people that seem to have resistance before.
Right.
So we're seeing a lot of institutional demand forming at the same time, and those take a while to be put into place and to be executed, but it seems like almost every major institution has something in the works.
Yeah.
And it seems like that amount could almost double the market cap in Q3.
Yeah.
Interesting. It's not too risky for them to ignore this. I mean, it's becoming huge.
Yeah.
Absolutely. If they're not building something or working on projects, they're going to have to buy it at a pretty large premium when there's not a lot of good groups left. So it's sort of adapt or lose your client base.
Yeah, and we've already seen a lot of family offices and private investors who are, having to work around their banks to get into the space, and there's a lot of demand for it. So yeah, last year I think was all retail, and this year it's more than that.
Yeah.
So it's retail plus some pretty major banks.
So in the last minute or so, just kind of tell me what you'll be watching. I mean, you are watching this space so closely.
Absolutely.
What kind of things are on your radar screen for, let's say, the rest of 2018?
That's a great question. So I mean, with what we were just talking about, bank involvement, and as companies are starting to ramp up with blockchain, first of all, I think we're going to see a wider acceptance of this as just a normal part of the economy. Instead of it being, oh, cryptocurrency, that's that weird group who likes to talk about Lamborghinis. It's going to become more of something where companies are investing in this and they're trying to find out where are inefficiencies that can be solved by blockchain. Then you're also going to have banks saying we cannot ignore this, and we may have to think Bitcoin may be the money of the future, right? And if it is, are we going to be prepared for that or not? Are we going to take care of our clients or not? And so I think this is really the year where we see kind of, mass adoption where it stops.
It goes from weird to mass adoption. So all big revolutions start weird, right?
Yes, they do. Yeah. Revolutionaries aren't always the normal folk.
It's true. Okay, thank you so much, Luke Blodgett, also Benjamin Blodgett of Octic Capital Management. Thank you as well for joining us on Blockchain Global News. I'm Jane King at the NASDAQ Market Site. Have a great day.